Hi, I'm Ricardo Lopez, broker at Marisol Properties, and today I want to simplify the process of buying a house. I'm going to take you step by step so that you understand what the process is and you don't get overwhelmed with the whole idea of buying a house. Now, one thing I want to clarify is I'm talking about buying a house here in Florida. We are in Brevard County, the Florida Space Coast. So the process may be a bit different somewhere else, but this is how it works here. All right. First things first, you have to have some money saved. Some people come to me and they want to buy a house and they have absolutely no savings. And there's going to be expenses. Even if you get somehow help with paying all of the closing costs and you get a VA loan, which is 100%, no down payment, even if you get all of that, there's going to be after that moving expenses. People need to buy things for the house. So you need to have some money saved. So let's start there. Make sure you have some money saved to buy a house. Some people ask me how much money. That depends. That depends on what you're going to buy. I have 7 steps that I want to take you through. The first one, select an agent. It is extremely important that you get somebody to guide you and to take you by the hand from the beginning to the end, because that by itself is going to simplify the process. Now, selecting an agent doesn't mean that you just ask somebody and just get any agent and that's the agent you're going to use. Recommendations are great. You know, it's good to ask around and get a recommendation, but it is very, very important that you sit down, interview the agent, talk to the agent, and make sure that you are on the same page and you click. You need to work with somebody that you feel comfortable working with. And that is top priority number 1, the agent, the realtor that is going to take you by the hand and is going to help you from beginning to end. When you decide on the agent, the realtor that you're going to work with, you're going to sign a representation agreement with that person and with that brokerage. I have another video that talks about why you need to sign a representation agreement, and I'll put a link to that video in the description. There are 2 sides to the buying process. There is the realtor, the real estate side, and then there's the lender, which is the agent on the lender side. So that will be your mortgage broker, okay? The lender, selecting the lender and the person that you're going to work with, that is also very important, and that is step number 2, selecting the lender. I always recommend to work with a lender that is local to where you're buying. In our case, local here to Brevard County, to the Space Coast, that they have an office here, that we can get in touch with the lender. It is also best if it's a lender that has a relationship with the realtor, so the 2 of them have worked together, they know how they work together, because they are going to have to talk to each other and communicate because both of us are helping you throughout the process. So the lender and the realtor, those are 2 sides, 2 very different sides. The lender is going to help you get the money to buy the house. The realtor is going to help you throughout the whole process of finding the house, writing the contract, and all of the process of buying the house, which is the following steps that I'm going to take you through. Okay, let's move to step number 3. Step number 3 is getting pre-approved. It is very important to get pre-approved. So this is on the lender side. You're going to get pre-approved for the loan. And the reason you want to get pre-approved is because you need to know at what level you can afford to buy a house, so that we can look at houses that you can actually put an offer in and you can actually qualify and buy. So that pre-approval is going to give you that idea. It also makes sense so that we have a range to work with and that when we put in an offer, we're ready, because in order to put in an offer on a house, if you're working with me and I find you the perfect house to put in an offer, you need to have this letter of pre-approval that you get from the lender. So it is extremely important to get pre-approved. In the pre-approval process, they're going to look at different things. So in order to get pre-approved, they're going to look at your income. They want to make sure that you have a stable income. If you're working by yourself, if you have your own company, you need like 2 years of tax returns in order to do that. But you can talk to the lender about that. You're going to have to prove that you're earning money. They're also going to look at your debt, how much you're spending, because one thing is income. You could be making a lot of money, but you have more debt and more expenses than the money that you're bringing in. And that's a problem. So they're going to look at the expenses, and they're going to look at that relationship between the debt and the income. And that's called the debt to income ratio. It's a formula that is very important, and they look at, and they will look at your credit report and see if you have a history of having borrowed and paid in time, so that there's a history that you're able to borrow the money for the mortgage. Okay, let's go to the next step. Step number 4 is looking at houses. This is the fun part, okay? So we're going to go out there and we're going to start looking at houses. In our brokerage, we are going to send lists of houses to you. We do that after we sit down with you and we talk it over and we get all of the things that are important to you. So we're going to learn from you. We're going to have a conversation, and you're going to tell me that I want a yard that is big or not big, it's fenced in. I want block construction. I want city water as opposed to well water, or I prefer well water. You're going to tell me what you like and the areas and everything else. If it's important to you, the school system, we're going to go through all of that, okay? And we're going to prioritize things and then send you a list of houses based on your priorities. You're going to look at the houses, you're going to look at the pictures and decide which do you want to see. We go out there, we look at houses. It always happens that then you look at houses and you say, I don't like this, I don't like that. We start learning. Sometimes you think you want something, but when you're out there looking at the houses, you don't feel it. And buying a house, it's emotional. You buy with the heart. I always tell people, you buy with the heart if you're buying a house for yourself. If you're an investor, you buy with your brain, okay? It's a big difference. So once we look at houses, you find the perfect house, you feel that that is your house, you decide to put in an offer, we go in and we put in an offer. Making an offer, of course, is step number 5. Making an offer means I sit down and I write a contract. It's a buy-sell agreement. It's the actual contract to buy the house. That contract is sent to the listing agent with your pre-approval letter that I mentioned before, and we may have some addenda if it's an FHA loan, it needs an addenda for FHA. If it's a house that was built before 1978, it may need an addenda for lead paint. So things, everything that needs to be put together, we put it together, you sign it, and we send the offer in. There are certain things that are important that go in that contract, okay? Number 1 is the price that you're offering. The fact that the house is listed for this amount doesn't mean that that's what you have to pay. You can offer less, you can offer more. If it's something that you really, really want and there's multiple offers, we may go over the asking price. So it depends on the situation. It depends on, the valuation of the house. Before making an offer, I checked what the market value of the house is. So I can advise you and say, hey, this is priced really, really well, so we don't want to go a lot under. Or I may tell you, hey, this house is overpriced. Let's offer a little bit less. So it depends. It depends on that. So we have the offer price. That's one important thing there. The other thing that is important is the amount of money that you're going to put in as an escrow deposit. What is an escrow deposit? An escrow deposit is an amount of money that you say, hey, I'm going to put in this money and this is my money. It's going to be credited to me at the end when we close, but I'm going to give this money now. You have to actually deliver that money once the offer gets approved within 3 days. You deliver that money. Here in Florida, we normally use a title company, sometimes a lawyer, but whoever the closer is holds the escrow. Rarely does the brokers. In our case, we don't hold the escrow. We have the title company holding the escrow money. So that goes into an account, which is an escrow bank account, and that money is held there. It's your money. However, the money gets returned to you if you get out of the contract under any of the contingencies of the contract. We'll talk more about that in a second. And the only thing that could happen is that if you get out of the contract because at the very end you decide, I don't want the house anymore, that's when the seller keeps the escrow money. All right. So in the offer, we have the amount of money that we're offering for the house. We have the escrow deposit that you're offering. Then you have to say what financing, how much you're financing. So, I mean, if it's a VA loan, for example, you may be able to finance 100% on a VA loan. If it's an FHA loan, it's usually 96.5%. Conventional loans, sometimes you finance 95%. And then the difference is what you put out of your pocket. That is not the escrow deposit, that is the down payment. That is part of the house that you're actually buying. That equity on that house you're buying out of pocket. This is money that you have saved. Now, in some cases, you can put, like on an FHA loan, you can put 3.5% down. On a conventional, you can put 5%, but you could also put 20% down. One of the benefits of putting 20% down is that the mortgage broker, the mortgage company, the lender doesn't charge you for what is called mortgage insurance. And beyond the scope of this video, but I can explain that to you how that works. But if you put 20% down, you save money on the monthly payments. All right. So the offer will have the amount of money that you're offering, the escrow amount, the financing, what type of financing it is, if it is FHA, if it is conventional, how much you're putting down. And then it's also going to say what the inspection period is. So the offer that you're putting in is going to say, hey, I want a 15-day inspection period, or I want a 10-day inspection period. That's also part of the offer. And then if you have any kind of appraisal contingency or anything else, you have a contingency of selling another house or anything else that could be a contingency of the contract, that is all part of that offer. All right, so step number 6 is actually the contingencies. So there are contingencies in the contract that are things that the contract depends on. These are the things that if they don't happen, you can get out of the contract and get that escrow deposit back. One contingency that is very important is the inspection contingency. Actually, I should say inspections because there's usually more than one. We have a general inspection, which is somebody's going to come in and you hire somebody. You're going to pay this person out of pocket to come in. And this is after the contract gets approved, okay? Let's assume before we get to this step of contingencies that you got the offer approved. Okay, you got the offer approved. Everything is in order. We start counting, and the first thing that we have is this inspection period. This inspection period is usually between 5 and 15 days. Around here, we usually do it for 10 days. Let's say it's a 10-day inspection period. During those 10 days, you hire an inspector, the general inspector that is going to check everything. That general inspector is also going to do what is called a 4-point inspection. That is an inspection report that you're going to send to the insurance company that is going to give you a quote for the insurance on the house. Insurance companies here in Florida require this 4-point inspection that in order to insure the house. The 4 points are the plumbing, the electric, the air conditioner, and the roof. So all of those things have to pass. But in the general inspection report, the one that you don't share with the insurance company, it has a lot of things that it's going to come out. They check everything. And the thing that you got to keep in mind is that you're doing the inspection to see what you're getting yourself into, basically. So you're going to check all of this and you're going to find out, hey, let me see if I still want to stay with this contract, because there's all of these things that are wrong with the house. Now, there's always something wrong with the house. Even brand new houses have problems in an inspection that need to be corrected. So there's always issues that need to be corrected in an inspection. Now, a lot of these issues, because you're buying the house as is something that you're going to have to deal with after you buy the house. However, we, as your realtor, as your brokerage, we are going to negotiate on your behalf, and we're going to try to get the seller to fix a lot of these things. So this is a time for us also to negotiate, especially if there are big issues. Like, for example, the roof, we find out, is at the end of the life. There's no way you're going to get insurance. We're going to have to negotiate that. We're going to have to get a new roof. But there could be many other things that come up that are big issues that need to be negotiated. And again, this is something a little bit beyond the scope of this video, but I can go into it. Just give me a call and I can explain it, in depth. Another contingency is the appraisal contingency. Okay, the appraisal contingency, the bank is going to lend you the money. The bank is only going to lend you the money based on what the value of the house is. So you could have a contract price saying that the house, I'm paying $400,000 for this house. But the house is not worth $400,000. When they do the appraisal, it's worth, say, $350,000 or whatever. In that case, the bank is going to say, wait, I'm not going to lend you money based on the 400. I'm going to lend you the money based on the 350,000. So if the appraisal comes in at a lower amount than what the contract price is, we have to negotiate. We have to get the seller to lower the amount, or you have to put more money out of your pocket if that's a house you really want. Say you don't come up with an agreement, you can pull out of the contract because that's a contingency, and you can get your escrow deposit back. If the appraisal comes in above the contract price, fantastic. That means you're buying the house at a discount. All right. What's the next contingency? One very important one is the actual approval of the loan. The loan has to go through underwriting. It has to be approved. If it doesn't get approved by any reason, then you get your escrow deposit money back because it's a contingency of the contract. There are many other contingencies that could come up, but those are the most important ones. Now let's go to the final step. Step number 7 is the closing. This is the fun part, okay? Well, I said it was fun to look at houses, but it's even more fun when the day of the closing, when the house becomes yours. Some people ask me, when do I get to move in? When do I get the keys? At closing, you're going to sit down and you're going to sign all the papers. And it's a lot to sign, especially if you're getting a loan, if you're, buying a house through a lender and you have to sign the note, which is the loan, the document that says you owe the money. You have to sign the mortgage. The mortgage is the document that says if you don't pay that money, we can take the house away from you. So you have to sign all of these documents. Once you finish signing all of the documents that same day, you get the keys to your new house and you can move in. The house is yours. The minute you finish and the money gets transferred, the house is yours. Now, after closing, There may be things that come up, and we never stop serving you. We never stop talking to you. We're still going to be there to support you. Just today, right now, I just got just before I started recording this video, I got a message from a past client saying, hey, I just got a note from my old homeowners association saying that I owe money. And do I need to pay that? And the answer is no, you don't need to pay that. At closing, there was a document from that association saying this is what is owed at the time, and all of that was taken care of. We'll take care of you. Don't worry about it. We're looking into it. So that happens after closing. But basically, that's it. We're talking about 7 steps that you go through. If you have an agent that is going to help you, we will answer all the questions. We will simplify everything. We will make sure that you're taken care of and that we take you by the hand from the very beginning to the day of the closing and hand the keys to you. That's it. Thank you for watching. If you could watch this other video, this one is really interesting as well. And I'll see you then. Thank you.